Welcome to the Truckers and Nerds podcast, where we connect real-life truckers with freight tech companies to discuss technological innovations in the trucking industry. The Truckers and Nerds podcast is hosted by Tobenna Arodiogbu, CEO and founder of CloudTrucks. This podcast is brought to you by CloudTrucks.
Today, we are joined by Daniel, the CEO of Coast. Coast is a new payments startup focused on the fleet payments space. And we're excited to chat with Daniel about all things payments in the fleet industry, but also in the trucking industry. So Daniel, it's really nice to have you.
Thanks, Tobenna. It's really exciting to be talking to you. Thanks for having me.
Yeah, I think a good place to probably get the conversation started is just chatting a little bit about your background and how you got to starting Coast.
Yeah, so I mean, I'm not somebody who you would think of as having any excuse to be doing anything around logistics and transportation. I'll tell you how I got here. So I grew up as a software engineer, pretty much almost exclusively in financial services. Doing some pretty institutional stuff, like designing, building systems for investment banks and asset managers and hedge funds. I ended up leaving that career just to try some other stuff. I went to law school and business school. When I was in grad school, that's around the time that interesting people with interesting ideas started approaching me to co-found fintech companies. The co-founder or the person who became my co-founder and the CEO of Bread was one of them. And so I started that company, my first fintech company, Bread, 7 years ago in grad school, and ran it for about 5 years after that. And I'll say, along with my co-founder and CEO, Josh, I'll say as an aside, it's a little bit of an idiosyncratic background. I've done a little bit of a bunch of things. It ended up being really well suited to running a fintech company. Both Bread and Coast very much technology companies at their core, and I am, pretty experienced in software and architecture and product. Finance is a language that I ended up speaking well from the years of the banks, and the legal and regulatory training comes to bear every day in a pretty complex and regulated industry. My role at Bread was a CTO and COO, and I did that for 5 years. The company was a venture-backed business. We raised a little more than $100 million in equity capital. The company eventually exited last year to Alliance Data Systems. It was a really great experience. I ended up leaving, looking to start something new because I really enjoyed that process of building a payments business from the ground up, and wanted to do it again as CEO. I spent 2020, which ended up sort of being the year of the pandemic, obviously, sort of picking my head up and seeing what other problems and challenges people were solving. It was pretty great, actually, after 5 years being laser focused on the problems of one company, sort of picking my head up and saying, what are the other challenges? What's exciting? What's frankly not exciting to me in early stage fintech? And so I was an advisor to a handful of startups. I was an entrepreneur in residence at Foundation Capital, which is the Silicon Valley VC. And it was in the context of those conversations that I discovered this fleet payments category, which, if I'm being candid with you, a year and a half ago, I don't think I knew existed. I haven't been able to think about anything else ever since. And so I eventually ended up deciding I needed to start a company around it. And that's how I got to where we are today, building the team around Coast.
Nice. And Coast just publicly launched, right, a few weeks ago. So can you spend a few minutes seconds, minutes, whatever amount of time makes sense, just talking about Coast and the problem specifically that you're looking to solve there? Yeah,
so Coast is the financial platform for the future of transportation. If you're a company in the U.S. that owns or operates a fleet of vehicles, and that could be the $800 billion trucking business, obviously, which you know very well, but it also includes plumbers or HVAC installers or school bus companies or landscape crews, you name it. You've got a commercial payments need that's in many ways analogous to the need that's solved in other businesses by, your Amex corporate card, or if you want venture capital backed examples, by Brex or Ramp or Divvy. You need to be able to give your employees something they can use to pay for job related expenses. When those expenses have to do with the vehicle, which could be maintenance, but really buying gas is the biggest use case. And the employees are your drivers. You have a bunch of specialized needs to make sure that you have the controls required to be able to have visibility into what's going on with your spend program. You don't want to just give a general purpose corporate card. We can talk more about that. There are a handful of companies that are in the U.S., really, really huge companies, massively profitable companies that have emerged really over 30 or 40 years with technology that's about as old to serve the specialized needs to provide payment solutions for this vast sector. But they're not sort of tech companies. They don't have innovation in their DNA. And, that lack of innovation has started to really cause a lot of problems for their customers, the various owners and managers and drivers of all these categories of vehicle fleets. There have been a number of technical and regulatory developments over the last few years, which make a really compelling opportunity for somebody to come in with a superior and technical product to provide a better solution to these fleets. And that's what's got me really, really excited. Right now, we're a seed stage business. We raised $6 million from a really great group of investors, including a lot of folks who backed me in my last business. So Sheila Better Tomorrow Ventures, whom I know that you know very well, he led our seed round, but we're backed by some bread investors like Bessemer and Box, Graycroft, and a number of great new folks like Foundation Capital, Max Lupton, Sci-Fi VC, and the CEO founders of a number of great payments and fintech and logistics startups. But our first product is a fair and transparent commercial fuel charge card with powerful purchasing controls that fleets can give to their commercial drivers when they're on the road, and that's going to be launching later this year.
Nice. So that's pretty exciting. A number of the things that you just mentioned there resonate with me because, we started CloudTrucks about 2 years ago. And last year, we finally launched our app. And the first thing we realized was just how messy the payments world of the trucking industry was. And that's why we went on to launch CT Cash, right? Different value proposition at that point. We just wanted to find a way to get drivers access to their money instantly. But then you start to learn about other types of problems, right? So in the trucking industry, fuel discounts are really critical because like you mentioned, these fleets spend a lot of money on fuel. Controls are really important. So one of the problems that we've constantly heard about is access to credit, right? And I was wondering if you could talk about that a little bit, because I know that that's part of what Coast is also providing is not just the ability to issue these cards to your employees or contractors and manage their spending, but also issuing the right access to credit to a business.
Well, that's right. So the product is, as I mentioned, a charge card product, which means that we pay out for the purchases of fuel and other vehicle related expenses that the employees incur over the course of a given time period on behalf of their employers. And then the employer pays us at the end of the month. And that might not seem like a really long amount of time, but for the trucking industry, for example, where operating margins are very low, they can be between 3 to 5%. The operating capital and sort of managing float and cash flow really matter a lot. So you want to be able to provide what's effectively a credit product, even if it's a monthly pay credit product, to folks that they can manage their cash flow and their operating capital needs. That's tough in commercial cards generally, particularly in fleets where the incumbents who sell these fleet payment solutions often will put folks on, for instance, daily pay, where they don't really get more than a day's worth of float or 7-day pay, if that. What we provide is a 30-day charge card product so that people have that month to be able to pay their bills down, their balance to be paid in full. And we don't require a personal guarantee, which is another real challenge for people who are business owners and are trying to do something that's entrepreneurial. The risk that they take on when they get a charge card product from an incumbent that asks for a personal guarantee makes it really difficult for them to be able to get the resources that they need for their business. So our product is very simple, a no personal guarantee 30-day charge card product, which gives access to that kind of operating capital for the fleet owner or manager.
Nice. No, that sounds great. So right now, so you said that you'll start issuing these cards in the fall of this year. Was that what you said?
Yeah, that's right. So sometime right around the end of Q3, beginning of Q4 is when we believe we're going to start moving money for our customers.
Got it. And what size of fleets are you focused on, and are you focused on any specific sectors?
Yeah. So as of today, we're not focused as exclusively on trucking as the platform the customers that use the CloudTrucks platform. Although we are having some really interesting conversations with folks there who are dissatisfied by incumbent solutions as well. A lot of the most difficult challenge has been for small and medium-sized businesses that operate local commercial fleets. You know, when you think about home services, the plumbers and the HVAC crews, the pest control and alarm companies, the last mile parcel delivery services, some of the taxi and livery stuff. A lot of those kinds of vehicles, the light and medium duty class 1 to 6 vehicles that park in the same lot at the end of every day, those are the ones that really face a lot of challenges. They need to really be able to allow their drivers to fuel up anywhere that they happen to be in the front aisle of the gas station. They can't always just be restricted to the particular kinds of truck stops that might have deals with the incumbents to accept their very specialized solutions. They want to have that universal acceptance. And those are the folks that really need to have the line item level visibility on what their folks are buying, because there's always going to be the rogue employee, instead of buying the diesel gas or the commercial vehicle, is going to the convenience store to buy Cokes and smokes. That's the kind of area where we're sort of seeing an enormous amount of interest in what we're providing, and where there's a sort of dissatisfaction with incumbent solutions. But that being, and the businesses that we're targeting generally have at a minimum half a dozen vehicles, but it goes up all the way to 200 or 300 vehicles. We are actually seeing quite a bit of an interest as well, further down towards more of the micro SMB and even owner operator type of businesses. So we're talking to those folks as well. So we're speaking across industries, and we're speaking across target fleet sizes, but we're seeing right now a lot of focus on sort of the small and medium sized local commercial fleet businesses as an area where we can get our initial growth.
Got it. Yeah. So you mentioned a bunch of times that, the incumbent solutions are not really meeting the needs of the customer, right? So what are the challenges that are being faced today in the industry with these incumbent solutions? And then with traditional credit cards, you also mentioned this need for a personal guarantee. Is that the reason why, say, like an Amex, for example, wouldn't be a perfect solution in the fleet space?
Well, let's start by talking about why general purpose commercial cards, like the ones that are sold by Amex, which has obviously a massive commercial credit card business and commercial charge card business, why those don't work for vehicle fleets. The vehicle fleets need to have more granularity in terms of the control and security and visibility that they get from the transaction data reported to them by their credit card issuer. So they need to be able to see not just that you spent $50 at 7-Eleven. They need to know what it was for. They need to tie it back to a vehicle. They need to understand what were the various gauge and odometer readings at the time of the purchase, so that they can reconcile the gas that they're purchasing with the miles driven. They need to track spend by the corporate asset of the vehicle, in addition to tracking spend associated with the employee. These are specialized and really important and complex features that your Amex charge card or your Capital One charge card or your small business Spark credit card simply don't provide you. And so managers don't feel that they can give just general purpose credit cards that they would use for other commercial purchasing to their drivers who are out in the field. They need their mobile workforces to have a more specialized solution, which is what those incumbent products currently provide. But the challenge, because of the lack of innovation from the incumbent offerings that fleet managers and owners are facing now, it takes on sort of a number of facets. I mean, one, frankly, is just the transparency around fees. So the incumbents charge a lot for these products, but in ways that the fleet owner or manager won't necessarily have visibility or understanding into. And those sorts of hidden fees can end up adding up to thousands of dollars for a small business, where that really makes a real big dent sort of in what their bottom line can be at the end of the day. right? And then when we talk to customers, there's an enormous amount of frustration at those kinds of fee practices. And so for us, creating a fair and transparent solution that we think is what fleet owners and managers need is really priority number one. The second is fleet managers need their employees to really be able to fuel up anywhere they happen to be on the go. And with closed loop solutions, which is the majority of what you see in incumbent fleet payments offerings, those are only accepted at certain merchants, certain fuel merchants that have direct relationships with the incumbents, which isn't all of the places that a commercial vehicle driver might be. So universal acceptance matters a lot. The other is that the data that's coming from these transactions is difficult to extract out of the reporting that people get from incumbent products to integrate into other aspects of the operating lives of these businesses. So, for instance, to integrate the transaction information into their accounting systems and ERPs so they get better visibility into where their spending is going at a reporting level, to integrate it into, for instance, the increasingly ubiquitous telematics systems that provide vehicle data like precise GPS location and speed and braking and fuel and odometer gauge readings, to be able to intersect that transaction data about purchasing with the vehicle data to find insights for vehicle fleets to be able to operate their businesses more efficiently and grow faster. Those sorts of innovations are missing from incumbent offerings. They're missing in a way that is visible to and frustrates and actually makes an impact on the lives of the owners of these businesses that operate vehicle fleets. And we think that creates a really big opportunity for a new company that really is putting its technology foot first forward to create a superior offering.
Yeah, one of the things I like about a lot of what you're saying is, usually you talk to fintech companies and it's very heavy on finance and like very low on technology. But a lot of what you're describing are actually these technological solutions that you need to really build from the ground up to ensure that it's tailored to that specific industry. So I think that's really exciting. So when you talk about some of this data, I think last year, sometime maybe mid last year, end of last year, I started learning about this notion of level 2 and level 3 data. Is that the biggest innovations come out of the payment space that's actually enabling a company like Coast to exist today, or is there something else?
I would say that there's really three things that have enabled Coast to emerge now in a way that it would not have been able to do in the past. So the incumbent solutions, as I alluded to earlier, they created their own proprietary closed loop card payments networks that have that level 2 and level 3 data. So that's the kind of line item level detail, the sort of product type, unit of measure, and quantity of what's being purchased, the tax breakdown. That data wasn't available in the protocols of the Visa and MasterCard open loop networks from gas stations. The incumbents built or bought their own. They integrated them over the course of decades into hundreds of thousands of gas pumps across the country. Which is a pretty big moat for a guy like me who wants to break into the business. But over the last several years, there have been technical and regulatory developments that have created a really compelling case for why now somebody can do something new. One is that data, that level 2 and level 3 data, the incumbent networks rely on to do their thing. Over just the last few years, 98% of gas pumps are now passing that data to commercially issued Visa and MasterCard open loop cards. It might not be the exact same data that the incumbents get. It's not happening in the exact same real-time way, but it's enough to start to build something really powerful. Second, there's a bunch of new credit card issuing platforms in fintech. So there are folks like Marqeta and Stripe Issuing and Privacy Lithic that allow you to do pretty sophisticated and bespoke transaction risk assessment and decisioning without a huge upfront investment, which is great for a startup. And then finally, as I was alluding to earlier, there's the vehicle data, the increasing ubiquity of the telematics, both for regulatory reasons like the ELD mandate, which I'm sure that your customers are very intimately familiar with, but also for commercial reasons. That vehicle data is more available, which can be used in assessing the risk of a transaction to provide a fleet manager the confidence that they're authorizing what they intend to authorize and stopping potential abuse. So those three things taken together just create a moment where none existed before for a new entrant to come in and really be a technology first company, as you were saying earlier, to provide better products to the fleet sector.
Yeah. No, that's major. I mean, for us too, the ELD mandate has definitely made things a whole lot easier. Like with our card product, like I said, it's all about getting drivers access to money much faster. And sometimes they might need a cash advance. So they're out on the road. They need to purchase fuel. They've already started a job and they just request a cash advance. And the only reason we have very high degree of certainty that they are currently in the middle of a job and they've actually picked up a load, which is one of our requirements, is because of the ELD. And we can just, do automatic check in and check out. And that becomes part of the fraud detection system. You can kind of build these things over time. So that's been a huge one for us, as well as the getting access to that level 2 and level 3 data and using that to figure out like what types of discounts we should offer, and in the future some of those card controls that you mentioned. I know that you haven't fully launched yet, but I'm curious. You were talking about 2020 and COVID, right? And taking this time to really learn about the fleet space. How did COVID shape your views on what problems you should work on and whether this was actually the right problem to tackle?
I would say the pandemic really put into sharp focus the challenges of businesses and workers that operate in what I guess you could call the real world. And we witnessed the on-the-ground personnel that we've all come to know now as with the phrase essential workers, and the difficulties and risks that they took with their jobs, as well as companies in logistics and in field services just being strained to the breaking point as America under lockdown, sort of leaned more heavily than ever before on supply chain and delivery. So my background is in financial services and technology, not in logistics and transportation. Mm-hmm. So I was really interested to understand the payments flows and the financials technology that enable these sorts of businesses and their commercial driver employees. I was just blown away when I started looking into it by the size of these payments volumes and the companies that enable them, and how little innovation has taken place in the category in the last couple of decades. And that to me just was a really, really compelling opportunity. It was an area that I thought of more and more under the circumstances of the pandemic, and then coming at it from the perspective of someone coming out of fintech, sort of that intersection, I think, just really would have sparked for me. Now we sort of been able to navigate starting a business in the pandemic, pretty well, I would say, in the sense that, we've been able to raise seed money. We've been able to hire the core team remotely, but the team's vaccinated now. And we're building this company in New York City, and we're getting together, heads down, sort of building the product, talking to customers and figuring out how we can solve their problems. So we've been pretty fortunate in sort of how the pandemic has affected us as a business, but sort of seeing how the pandemic has affected all the businesses that we want to be able to help as our customers, that really lit a fire.
Yeah. I mean, I tell every single person who interviews with us that, like, if you want to work on something that is really meaningful, like where that you are truly making an impact, it's not just some tagline or anything like that. I mean, working on stuff for these folks who operate in the real world, who are out there every single day, keeping the economy going is as worthwhile as a goal as any. And speaking of coming from the fintech world, I'm sure that it was shocking to you just seeing, after spending years working at Bread and really building out all these financial innovations, to then come into the logistics space and see how behind some of these things must have been fascinating. Well, one of the things that I was most fascinated by on payments was, just kind of shifting away from, card issuing and all of that was, I learned that some companies would charge drivers an additional 2% to pay them via ACH versus a check. Right. And I was just looking at it. I was like, well, it doesn't cost you any more to do this. So clearly this is like a convenience fee, right? You're charging the driver because you know that this person isn't at home all the time, doesn't want to receive a check, and the check can get lost and all of this stuff. So you're being charged 2%. And it's not to get the ACH in two business days, by the way. It's to get it in 30 days, right? And it's just crazy to see kind of what's going on in payments across the board in some of these spaces and logistics especially.
Yeah, I would say a few things to that. One is, by the way, you see that in my world in card issuing, where it's not uncommon for the incumbents to charge the other way for electronic payments fees to allow folks to pay their bills for their credit card statements for fleet cards via ACH rather than by check. And what ends up happening a lot of the time is an enormous frustration. People don't want to pay the big electronic payments fees, and so they forget to write the check on time, and so then they get hit with big late fees. So trying to sort of make these things easier, trying to think about not how we can extract the most dollars from our customer, but how we can build a sticky relationship to last for the long term by really being a partner for the growth of their businesses is something that we're trying to do. So I relate very much to what you're describing. The other thing I'll say, just sort of to react and echo to what you said before, is that like this has been sort of the underlying insight I think about sort of trucking and transportation is exactly what you've been talking. Is that like it's just so large and so underserved, and when you think about it, like everything that you touch was once on a truck, basically. Maybe a tree and grass, not so much, but everything else essentially. Yes. And, logistics and transportation are in some ways an underpinning foundation of the entirety of our economic life. And they're operated by this widely diverse array of different kinds and sizes of businesses. But yet financial services, which have developed so much over the last several years with all sorts of fintech products providing low or no cost services to consumers as tech companies and other kinds of businesses, they really haven't kept up with the needs of transportation logistics. If you can take the complexity of financial services, which requires understanding the finance and the capital markets and the risk and the legal and the compliance, the operations, the customer service, and of course the technology and the product stuff, and create a simple customer experience for trucking businesses and their drivers that can abstract that complexity away, make their lives easier, then you can build real customer connections and engagements as you partner with them to grow their businesses and help their employees thrive. And that's what makes me so excited about Coast fundamentally at the end of the day, is just the opportunity to serve this huge and just a fundamental sector in the economy.
Yeah, no, definitely. So I think this is a perfect segue to kind of like your mission statements, right? So it's stated as the financial platform for the future of transportation. And, we've talked about different problems in the industry. We've talked about how Coast isn't just about providing credit to these businesses, although that in itself is a huge problem, but also providing the right software and controls. I imagine that a lot of this, like you mentioned, is not just about charging for every little thing or whatever. It's like you want to provide visibility. Just talk about that a little bit, like where Coast is going, where you kind of see the future, and how you would like this to progress over time.
Yeah. So our first product is we provide a modern charge card that allows fleet managers to give their employees a super easy way to pay for gas with a card, as well as for other fleet-related expenses. There are no prompts at the gas pump to enter the odometer and the vehicle and driver ID and a PIN. It's just swipe and go, and then there's a super simple SMS-based workflow if there's any additional information that needs to be collected. Over time, we're going to be integrating with more telematics and ELD vendors so we can make it even easier for the driver, since we'll know more about the transaction just from the vehicle data that we're getting. And then for the fleet owner or manager, they can set controls, see exceptions, alerts, in the case of attempted abuse or fraud. It'll integrate easily into their accounting and ERP systems with an easy to use and a mobile interface that lets them stop wasteful spending before it gets out of control. And it'll keep their drivers moving if they have any issues on the road. And most of all, it's a fair and transparent financial product with flat monthly subscription pricing based on the number of employees that are using the card. There are no per gallon administration fees, no per transaction fees, electronic payments fees like we were talking about, no phone payment fees or check processing fees or inactive card fees or reporting fees or minimum administration fees or portal access fees. We don't charge like crazy inflated late fees for higher unpaid balances. Just super simple, easy to understand, low cost subscription pricing that's transparent and fair. And then you're asking sort of what's to come. I mean, over time, we intend to layer on more best-in-class fintech solutions that reflect a same posture of like fair and transparent financial products, and this payment solutions for more categories of the business's spend beyond just the vehicle-related direct expenses on fuel and maintenance, fair and easy business banking, and even consumer banking solutions potentially for the commercial drivers who might not necessarily sort of be served today by a lot of the new consumer banking startups that we've seen in fintech. So we see this as so you were saying at the beginning of the question, as the financial platform for the future of transportation today. It's really the specialized solution of the fleet payments charge card that people need today. But we see that as being sort of our first value offering that we can then build a suite of solutions around that all work together and that all provide sort of best in class, easy to use, transparent financial services for the fleet sector.
Great. Well, I think that's a perfect place to leave it. And Daniel, thank you so much. Really looking forward to the full launch of Coast. And I think this is great for the sector. It's great for trucking. I know you're not hyper focused on trucking right now, but it's great for the trucking industry. It's great for the fleet payments industry, and definitely looking forward to more and more innovation in the space overall.
Awesome. Well, Tobenna, thanks so much for having me. It was really great talking to you guys, and hope to speak again.
Yep. Sounds good.